Happy New Year and happy Child Tax Credit Strategy season. With us today, Aaron Rheaume, our Director of Financial Planning and President of the organization, and as the kids say these days, the GOAT. So good to have him with us. And more importantly, talking about these child tax credit strategies. Aaron having multiple beautiful daughters, he understands the importance of these credits. And Aaron, I obviously am so glad you're here to talk about these because child tax credits can be very powerful when you use them against a tax return. And what are some of the things that when we talk about strategy that we're looking for our families, Aaron?
Well, that's a great introduction, Grant, but a salty topic because my oldest just turned 17 this year. And so that means I lose a child tax credit. So
Ugh.
before we get into it, let's kind of define a couple things. Let's separate uh, a credit versus a deduction and explain the difference. So there's a difference between a deduction and a tax credit. A tax deduction reduces the amount of income on your tax return, which then reduces your overall tax liability. A tax credit, however, is a direct offset to anything from a taxation standpoint that you would owe to the IRS. So the qualifying child tax credit for 2025 is $2,200 per child. And so they have to be under the age of 17 at the end of the year in order to get that. So I do have three daughters. I will lose one of those. So if I had roughly $4,400 worth of taxes, I could use that to offset my taxes dollar for dollar. Now, there's a couple other things when you're looking at child tax credits and credits overall. There's a refundable and a non-refundable portion. And so you've got to understand what the refundable portion is and what the non-refundable portion is of those child tax credits. Man, that's getting to be a tongue twister there. Um, there are some partial refundabilities and then there's some full refundabilities in different types of child tax credits. For the major one, for the one that people focus on, it's referred to as the CTC. It's the actual child tax credit that you have for kids that are under 17. You can get a partial refundable deduction. What that means is you're not going to take full advantage of that $2,200. So once your taxes are erased, that credit goes away. But the refundable portion means that the IRS will actually pay you. So if it's refundable and you offset your tax liability, you can get paid the remaining balance by the IRS. Now for the CTC, there are some income phase outs. So if you're single and you make less than $200,000 a year, you can get the full qualification for that. And then married filing jointly over $400,000 a year starts to phase you out of the child tax credits. There's several other credits. I'm not going to go too far into those. The big ones are like the child dependent and care credit, and then there's also an adoption credit. The adoption credit that you get can be up to $16,000. That is not a refundable credit. And then the child dependent care credit, you can offset somewhere between 3 to 6K of child expenses for kids that are under 13 or disabled. So there's a lot of different moving pieces. Those are conversations that we have here in the office when we can see someone's tax return. We see how many wonderful little dependents are listed on your tax return with their social security numbers and things to figure out how we can help you, and more importantly, make sure they're not missed by your CPA or tax professional. So Grant, tried to go in depth on that. Just know that there's 2 to 3 that are widely used. If we're going to dig into other areas, those are conversations that we'll pull out when we need to.
Absolutely. And Aaron, I appreciate going through all that because again, this conversation is not simply as simple as, oh, I have kids, oh, I get all my credits.
Yeah.
To Aaron's point, folks, you really got to understand how this affects your 1040 and how things actually come into play. And if you're not paying close attention to this, you could leave lots of money on the table. I know we all like our schools and roads, but Uncle Sam probably shouldn't be making more off of you than he needs to. And part of how we do this is through some of these credit strategies and some of the nuances that Aaron was talking about. And Aaron, I appreciate you going into those in depth. So if you've got your little ones running around, or you have dependents on that 1040, and you're trying to figure out, am I getting the most back? Am I maximizing what I have access to through the tax code? And you don't have a good tax planner with you, please give us a call, 800-928-4001. We'd love to get you set up with Aaron or one of our other talented team members to walk through this. Because again, this is, right, kids are expensive. And if we can get and utilize some of these strategies while they're dependent and while we're caring for them, it can only maximize your tax planning opportunities. But folks, thank you again for being with us. Hope you're enjoying the warm or cold weather wherever you are. We look forward to having a conversation with you soon. Take care.
Happy New Year.